In front of us, we have a question that I want us to discuss, brainstorm, and see how we can juggle it up in the final exam. Before I proceed, what time is your exam, Raymond?
9.
Okay, doing morning. How about Patience?
At 1.
Okay, afternoon. Then Florence?
1:30.
Afternoon. How about Baiko? What time is your exam?
Morning.
At
At
what?
9.
Michael,
At 9.
are you doing remote?
What?
Are you doing remote exam?
No. I'm coming to Kampala.
Or you're coming to Kampala?
Yeah, it is at 9.
Okay, it's in the morning. All right. So I'm sure we shall be able to crack the paper. Just have the confidence, and I would prefer that we use this week to do personal revision. But because I had not gone through group accounts, that's why I'm giving you this session. Unless otherwise, this week should be for personal revision. In fact, I used to call it revising your revision, because you've been revising and you've been making summaries. So this week should be to revise your revision and also to try out standard mocks. In fact, up to Wednesday, you can be doing standard mocks and then you debrief. So after Wednesday, you leave anything new. You don't look at anything new. Now you concentrate on building confidence on what you already have. That is the trick to these papers. Make sure that you revise your revision. Okay. So we can go through the question that I am presenting to you guys. This is a full question. I'm going to take you to the practice platform and see how it is, but I want to give you a hint on how you should approach it. What you can do, you can first read the background, which is always the first thing on your right. I will show you where it is. After reading the background, you go to the questions. Okay, so the background says, Chakoko has equity interests in several companies, including Greenco. So meaning that Chakoko is likely to be the parent company. And then depending on the other information they will give us, Greenco shall be either an associate, a subsidiary, or just a mere investment. So this is important for you to know that whenever I see Chakoko, I should treat it as the parent company, and then Greenco as another company in which Chakoko has interest. The directors of Chakoko have prepared an incorrect. They've been telling you that the directors of the parent, if you can say, have prepared an incorrect spreadsheet of the consolidated statement of financial position at 1st April to X1 to X6. Remember, going forward, your papers, you're supposed to be receiving pre-populated Excel. And so that pre-populated Excel is always having incorrect financial statements. Remember these group accounts, you can either face a consolidated statement of financial position, a consolidated statement of profit or loss, or a consolidated statement of cash flows. Those three. And in fact, they will always not be even full. Sometimes they can give you extracts. And of course, those extracts are going to be wrong, and it's you to make the adjustments to produce a correct spreadsheet. Okay. All goodwill other than relating to Greenco has been impaired. This is very important. Okay. These guys have different investments, and in all other subsidiaries, their goodwill is impaired. However, the one for Greenco is not impaired. So this is information that you can keep highlighting in your exam. You do not know what the questions are, but you feel that information is important, so you keep highlighting it. The financial year end is 31st March each year. Okay? These guys have prepared consolidated statement of financial position at 1st April 2x6, which is okay, and the year end is 31st March. So this is also important. The following exhibits available on the left hand side of the screen provide information that is relevant to the question. Of course, you'll find this statement. It just shows you that you are expecting some exhibits on the left hand side, as it is always the case. Okay. Initial acquisition of Greenco. Now these are the exhibits that are going to be provided. There is some initial acquisition of Greenco, initial purchase of 30% of Greenco. This is important. They initially purchased 30% of Greenco. Now for you can start thinking, brainstorming. If I have purchased 30%, okay, and remember they purchased it on 1st April 2x4. They are reporting for 2x6. So those are roughly 2 years down the road. Okay. Initial acquisition of Greenco, 30%. Then you can think, is it an investment? Is it an associate? Or is it a subsidiary? So this one we just highlight and then proceed. Highlight and proceed. Subsequent acquisition of Greenco. You see these guys? They further bought more. They further bought more shares in Greenco. So making now the investment to be what? 30 plus 18, 48. So you keep asking yourself, is it an investment, subsidiary, or what? You cannot make a decision here until when you read the contents of the exhibit. Then fair value of net assets of Greenco. This is good. Since we are given the fair value of net assets, now there is a need to calculate goodwill, as we shall see in the question down. And then we have the draft consolidated statement of financial position. What you must know is, in your paper, this exhibit that provides the consolidated financial statement is exactly the same that is in the Excel sheet. So even if you don't read this, it shall always be the same as in the Excel sheet. Okay, so before reading the exhibits, after reading the background, you go and check out the questions, so that when you start reading the exhibits, you know where to start from in terms of answering. So these are the requirements. Using exhibit 1 only, you see they're even telling you that you depend on exhibit 1 only. Discuss why Greenco should be classified as an associate and not a subsidiary on 1st April 2x4. So these guys, they are saying, using this exhibit here that we are going to read, okay, we should discuss why this investment in Greenco should be a subsidiary and not. No, should be an associate and not a subsidiary. Now you know already. You know what you should talk about. What is the difference between an associate and a subsidiary? That's what they want you to put here. And this is majorly theoretical question. You depend on the exhibit given to answer. Roman number 2. So here you just come and you highlight exhibit 1 only, then classify it as associate or subsidiary. That is also important. Okay. In fact, what we are going to do, we shall copy this and take it in our word processor. Remember we said we should have short what? Short heading. So you can say Greenco. Okay, start with a question. This is part A, Roman number 1. You say Greenco as an associate and not a subsidiary. So you underline it. So you start forming shape of your answer. But this is in the word process I'm going to show you. Okay. Roman number 2. Using exhibit 1 only, they also want us to use exhibit 1 only. Explain how Greenco should be accounted for as an associate using the equity method. Okay. In part 1, they were asking you why should it be accounted for as an associate. Then Roman number 2, you know that we treat associates using equity accounting, which is IAS 28. Now they're asking you how should it be treated using IAS 28 in the consolidated statement of financial position. So if you watch the videos on group accounts, I covered to detail IAS 28 equity method. So now they want you to use that knowledge of IAS 28 to explain how Greenco should be accounted for in the financial statements of SICO. Okay, but remember at which date? At 31st March 2x what? 2x6. Meaning that these guys, they already made errors somewhere. We are going to see. Okay, part B. Using exhibit 2, they're even directing you what to do. Using exhibit 2, explain why the classification of SICO's investment, okay, in Greenco should change on 1st April 2x8 to a subsidiary. So now when you go to exhibit 2, you will see that there is something going on that changes the status of Greenco as an associate to a subsidiary. And so you must pick out all those points regarding the change, and then you provide them in your explanations here. Okay, number 2, or part C, using exhibit 2. This was a good question because they told you what to use. Explain briefly how the additional purchase of 18% equity in Greenco should be accounted for in the consolidated financial statements of SICO. So these guys are purchasing additional shares of 18%. But remember, this is a time pressured exam. Please don't expect to find things that you're familiar with. Okay? So you must build the resilience to read new information by practicing. Let me first go through all these questions, then I'm going to tell you the hint that you can use. Instead of reading all these questions at once, you first read. There are 2 parts that want you to use exhibit 1. So better you go to exhibit 1, read it, come and attempt the parts that require exhibit 1. Then exhibit 2, there are also 2 questions, B and C1. You also can read exhibit 2, attempt them. Then exhibit 3, this one combines now. Okay, exhibit 3, they're telling us explain how fair value of the non-current and current assets of Greenco at 1st April 2021, including any deferred tax adjustments, should be calculated. Now this one is on fair value of non-current assets. Now since it requires exhibit 3, you can read exhibit 3, then you attempt it. Finally, C Roman number 3, using pre-populated spreadsheet. This is likely to be always the last question in question 1, because whatever you're going to do in part C Roman number 3 has been discussed up. So you just apply. So okay, we're saying using the pre-populated spreadsheet response option with exhibit 3 and your previous answers, you see. So whatever we've discussed up was bringing issues, so we should come and show them in the consolidated statement of financial position. Okay, adjust the spreadsheet prepared by the directors of SICO in order to prepare a corrected consolidated statement of financial position at 1st April to X what? To X6. So we shall use exhibit 3 and all our other previous discussions to present the corrected consolidated statement of financial position. So the guy is saying the spreadsheet should take into account the following. You see, this was part A, Roman number 2, accounting for associate using equity method. If you can go back, Roman number 1 was theoretical. Roman number 2, it included a calculation. So they are saying in your pre-populated spreadsheet, go and pick your discussion under Roman number 2, pick out all the calculations and bring them to the pre-populated spreadsheet. Then this is part B Roman number 1, the change in classification from associate to subsidiary, which is Roman number, which is this one here. Using exhibit 2, explain briefly why the classification. Now since they are changing, okay, since they are changing from an associate to a subsidiary, there's supposed to be some changes. If you remember the step up, the movement, okay, from no control to control, there's some calculation that we have to do. So the impact has to be reflected. Then the fair value adjustments. Of course, we know that once we have fair value adjustments, even goodwill is affected. So all the discussions up are supposed to be reflected. And then goodwill using proportionate method to calculate the non-controlling interest. So that's how big the question looks. And these are 50 marks. Okay, these are 50 marks. So here is the trick. Once you open the requirements, we said first start with the background. After background, come and read the first question. Read the question until when you find that there is change in exhibits. So the first two questions, A1 and A2, requires to use exhibit 1. So in the exam, you go and read exhibit 1 so that you can answer A1 and A2. After answering those two, you move to the next question. See which exhibit they want you to use. And then you also read those exhibits and answer the questions like that, like that. But remember, we said, guys, we said that these 50 marks, these are 50 marks. Sorry, these ones should be 30. Oh, this is question 1, so it should be 30 marks, right? So these 30 marks should take how much time? 30 marks should take 1.8 to give you, how much is that? Yes?
54.
54 minutes. So as you start, you should be able to follow the countdown, so that while you start reading Roman number 1 and Roman number 2 exhibit 1, you will not say that these are 3 marks plus 47, then multiply 7 by 1.8. Don't do that, it will be wasting your time. Just grab the total minutes for question 1, 54 minutes. And then you start answering very fast, so that by the time you reach the 54 minutes, you got the next question. And as I told you, the trick is you can start with question 2 to give you a boost, because those ones are easy marks, ethics, get those marks, then come to question 1 when you are confident enough. However, some other tutors encourage that you start with question 1, go to question 2, go to question 3. It is also fine. What is important is to have your standards at hand. But personally, during my exam, I did question 2 first. After that, I came to question 1 when I had even, that pressure, exam pressure, when it has come down. Then you come to question 1 when you can reason out without pressure, and then you proceed. All right, so since we have gone through the questions, I told you in your practice, you start with exhibit 1, Roman number 1, exhibit 1, Roman number 2. Then you read exhibit 1 and see what it is there. You come and answer those parts that require you to use exhibit 1. So what is in exhibit 1? Okay. On 1st April 2x4, on 1st April 2x4, SICO acquired 30% of the equity shares of GICO. Okay, perfect. The consideration consisted of 100 million cash. These guys paid that 100 million. The carrying amount of the net assets of GICO on 1st April 2x4 was this. The carrying amount of the net assets was 286, which was the same as the fair value. Remember, the standard wants us to always measure the net assets of the asset at fair value, of the subsidiary or of the investee at fair value. So they're telling us that the fair value was equal to the carrying amount, which was 286. Since then, GICO has been stated at cost in the consolidated financial statements of SICO. These guys, that is important, that since then, these guys have not made any adjustments, okay, in the value included in the financial statements of SICO. The remaining 70%, okay, let me ask you, if you have 30% investment in another company, do you consolidate? What do you do? Yes?
You don't do it for your control.
Okay. Let us continue. The remaining 30% of equity of GICO at 1st April 2x4 was owned by a few other investors. You see, if you don't read carefully, you might think that here there is dilution of ownership, and therefore the other entity that has 30% is the majority shareholder, and so they should what? They should consolidate. That is not right. You must continue to read the other information. They are saying that the 70% is owned by a few other investors, none of which owned more than 10% of equity of GICO. You see this one here? It was tempting. They are saying Charcoal has 30% and the 70% is amongst other investors, none of which owned more than 10%. Okay? Remember, at SBI level, there are different things that we should look out for when it comes to control. Yes, the percentage is okay, but there are some other things that we should look out for. The fact that these guys have 30% and the remaining shares owned by many other investors with less than 10%, maybe that would have given SECO the power to control. But the scenario goes on to give you more information. Analysis shows that all shareholders have voted independently in the past. Look at this, guys. Okay? Analysis shows that all shareholders have voted independently in the past. There has been no clear past voting pattern suggesting that Charcoal is unable to directly influence the economic decisions of other investors. You see? Now in your exam, they will bring when the other company can influence the decisions of other investors. That changes the scenario. In this question, there is dilution of ownership. However, even those with small ownership in GECO make independent decisions. Okay? Make independent decisions. So that does not make that does not give SECO an upper hand over the other investors. Please take note. In another situation, they will give you a scenario where that company with less shares has almost control because of influencing some decisions of other investors. Then that should be subsidiary. But in this specific case, all the points that they are giving, they are taking away control from SECO. 1, the percentage does not reach 50%. Then 2, even if there's dilution of ownership, these guys have independent decisions. Okay. SECO and GECO share some key management personnel. You see? Yes, they do share management personnel, but still that does not make SECO have control over GECO. The carrying amount of net assets of GECO on 31st March 2026 was, okay, let us get that. The carrying amount of net assets of GECO on 31st March 2026 was this. Are you seeing that this guy, there is a what we call the post-acquisition movement? Okay, they moved from 286 to 348. Now this movement, since it involves a calculation, it's likely to help us answer Roman number 2. For Roman number 1, we have been brainstorming. Why should they classify it as an associate? We've seen that all the points are against it being treated as a subsidiary. Then Roman number 2, show how Greenco should be accounted for as an associate using equity method. So, since we've talked about post-acquisition movement, it is going to come up. Remember, we are using Exhibit 1. There is movement in the net assets of the what? Net assets of GECO. And if you can remember, this guy said for them they have been stating it at cost. So you can see why is the mistake. They have continued to treat it at cost, yet this is associate, and when it comes to associate, we must recognize post-acquisition movement in the assets of the associate, and we take a percentage that is attributed to the investor, which is SECO. Okay, The increase in the net assets of GECO since acquisition was solely due to profits. Are you getting that? Remember, under IS 28, at each reporting date, you must get the profits made by the associate and then take a contribution or get a percentage of those profits and give them to the investor. These guys were not doing it. So that calculation is going to come up under Roman number 2. Is that clear? Can we proceed and answer the question?
Yes.
Okay. So that is the first discussion for Roman number 1 and 2. We are going to answer it. We have seen all the points are clear. It should be an associate. We can put that under Roman number 1. Under Roman number 2, since it is an associate, they should use equity accounting, and equity accounting says we should get the contribution of profits to the investor, and these guys were not doing it. All right, so this is done. Let me show you the let me now present the browser so that I can show you how you can arrange the work on the screen. So I'm going to take off this, then I will give you that. Okay. So that is it. I also need to change my recording. Okay, perfect. So let me go there. So can you please confirm? Can you see where I'm highlighting?
Yes, we can.
All right. So this is how once you log in, okay, your exam will look like this. That is question 1. In case you don't want to answer question 1 first, where do you go? Who can tell us? If you want to start with question 2.
You go to next.
You come here, next. So once you're done with question 1, okay, once you're done with question 2 and you want to answer question 1, what do you do?
You go back to previous.
Yes, but still you can use this. Are you seeing this navigator?
Yeah.
You can click on navigator, you come to question 1. If you're on question 4 and you want question 2, just come to navigator, look for that question. Is that okay with everyone? Okay. So I want to show you how you can play around. So this is the word processor. Okay. So what you do this. You can do this, put this one here, come to the requirements, also adjust this. Okay, after adjusting, I told you that while you are reading questions, you should be planning your work. So you can play around with this. Let me move this one here and avoid using shortcuts, please. Okay, so you can do that. It is not fitting. I can do this. Okay, so you have that. I told you start by naming the question that you're doing. Remember this word processor with SBR, this word processor is for question 1. So even if you don't write question 1, it is already question 1. So part element number 1. you come and copy. So we are going to get this, put it here. In your exam, you might find that you see when you do this, your cursor might be a hand. So what you do, there is somewhere, am I having it here? Unfortunately, I'm not having it here, but you can go on top here to change. Okay, you can go. I don't want. Okay, are you seeing this, guys? Fortunately, this one is giving me. Fortunately, this is giving me. But you have to click somewhere. You see where there is a hand. You click on it, then you see where you can now start to highlight. I know it is going to disturb, but after practicing, you'll find that it is now easier. So instead of having the cursor to highlight, it will be bringing a hand. So you'll be having something like a hand somewhere up here. You click on it to have this cursor like this, then you can select and copy paste. So for Roman number 1, they want us to discuss why Greco should be classified as an associate and not as a subsidiary. So you say, you remove this. Can't even do that. Greco, then you remove that. Greco as an associate and not a subsidiary. Then you highlight it. Please don't use shortcuts. Sorry, don't use shortcuts. You always have this information. This one here. If you want to underline, click on that. And then B. Don't use shortcuts. You'll mess up your work. Okay, so that's Roman number 1. We said, since we have 2 questions that require exhibit 1, we also put Roman number 2. You come and copy paste this, then we shall get a title for it. Put here, then say how Greco should be accounted for. Okay, how Greco should be accounted for as an associate using equity method. Okay, so you say Greco accounted for as an associate using equity method. You can even stop there. Then you remove these ones. You also underline it. Then you bold it. So those are the 2 questions that require exhibit 1. So after doing that, you can close this. Then you come and open exhibit 1. But remember, I had done some highlights in the Word document. Okay, let me do this. Make sure that you don't cover this part here. It is very important. You shouldn't drag it so down because it will disturb you to get. Leave like that. Then you come and open exhibit 1. Of course, this one will not open, but I'm sure yours will open. So you also come and adjust like this. Once you adjust like that, you can read the exhibit and this one. So you'll be reading here what you read. When you see that it is worth putting here, okay, you bring it. So what I'm going to do, since for me I cannot have this open, let me copy the exhibit and put it there, so that I can show you what I mean. Let me hope it will accept. Oh, it can't accept. So I'm going to get this and take it. I'm going to, let me just take you back to the what? To the Word document. But that's how you should balance it. You open it, put it around here, the content will come out. Mine cannot come out because of I finished, I think, the papers. I don't know. That's why it cannot generate the what? the words here, but would have looked here, read, put here the answer. Look here, read, put here the answer. Okay, let me take yes,
Can you like try to refresh and see?
no, it failed.
It failed. Okay.
Yeah. I think it brings some error. It brings some error. I think it's related to my, since I have no papers, maybe. I don't know. It failed. Even if I do that, that's what it has been bringing. But have you got this technique?
Yes.
At any point in time, you shouldn't have more than two screens open. You either have the questions here, the word processor here. Once you're done with using the questions, close the questions, then open the exhibit. Have the exhibit here, word processor here. And then you can be able to balance your screen. That is very important. Okay, let me take you back to the Word document. Okay, let me also change my recording so that it can pick out the change. Okay, all right, so now take it that here you have two screens, here for the answer, here for the exhibit. So once you read here, you go to your answer gap, and we said we already put Green-Co as an associate and not a subsidiary. So here now you bring in your knowledge. We say that you first state, not so? You first state. Okay. So what under state? What can we talk about an associate? Yes. Remember, we should talk about significant influence for associate, then we talk about control for subsidiary, then we apply. Are you getting the argument? So under state, we can say that an entity has significant influence, okay, over another if what? If, what does the standard say? If it has what? If it has, is it power? Does it have power? Yes? Guys, what is significant influence? If it has the ability to do what?
To participate in the financing and operating activities.
Perfect. This is now theory. To participate in the financing and operating activities of what? Of the other entity. Not so? How about control? How does control come about? Control arises when what?
Able to direct.
Control arises when one entity is able to direct
the financing and operating activities.
The financing and operating activities. Now, can we use the language of group accounts? A control arises when one entity, you can say in bracket, investor, not so? Investor is able to direct the financing and operating activities of the other. I just want us to be like real students, okay? Of the other entity in bracket we call what? Is it the investee? Is that okay? But there is another, there are three terms that give control that we must talk about in our answer. What are those terms?
One is power.
Investor should have power over who? Over the investee, not so? What else?
Exposure.
Variable returns for their involvement with the investor.
Perfect. Exposure to what? To variable returns. Okay. Can you add on?
Their involvement with the investor.
Of course, these ones are directly in the books, so you should be knowing. Variable returns from its involvement with the investee. What else? What else?
Ability to use its power to affect the amount of returns of the investor.
And should have the power to do what? And should have power to influence, and should have power to influence earning of such variable returns. You see, I don't want us to just read from the what, but so long as you understood the concept and you write it, it will bring out the point and the examiner will give you the mark. Is that okay? All right. So we can go ahead under control. Okay. If you've read the notes very well, there are things that we talk about. How does an investor gain control? How does an investor gain power over the investee? Do we talk about the percentage?
I think we talk about it.
We talk about the 50%, not so? Let me first connect my laptop. Power issues. Alright, so we now also have to talk about the 50% also. We can also talk about, according to IFRS 10, control is achieved if the investor owns 50%, owns over 50% of the voting rights of the investee. Is that okay? So which other conditions do we talk about when it comes to control? When, even if it is below 50%, but there is dilution of what? But there is dilution of the voting rights. So what we are going to do, first we are going to go up here and talk about we are going to talk about this. Let us copy now from the exhibit. Otherwise, okay, where is it? Oh no, 30%. Okay, the carrying amount. Let me copy this. Let me copy this and adjust this. Okay, so I'll bring here. Maybe we can say, according to IFRS 10, control is achieved if the investor owns over, however, okay, there are other factors to consider, okay, especially when the investor holds less than the 50%. Then we say this is CICO. What's the name of the company? CUCKLE. CICO owns 30% of the voting rights in Greenco, and the remaining 70% of the was owned by a few other investors, none of which owned more than, okay. Then we say, however, you see this one here, as I told you, following the knowledge we know, this one here would have given CICO control over GCO, okay? But there is this other statement that we must talk about. However, the analysis showed that all shareholders have voted independent in the past, okay? Independent in the past, and there has been no clear past voting pattern suggesting that CICO is unable to directly okay, so as such, CHACOCO, okay, CHACOCO does not have control over the financing of Greenco. Okay, so have I used the more, okay, according to, I've not yet used the furthermore, so I can say furthermore, CICO and Greenco share some key management personnel, implying that CHACOCO does not really have more influencing, okay, doesn't have more powers in regards to operations of Greenco. So now we can conclude. As such, what was the question? You can go back and, but you should always refer to the question to see how you can conclude. Explain how, okay, Roman number 1, why Greenco should be classified. So as such, now I'm going to copy that question and conclude. Okay, as such, Greenco should be classified as an associate and not a subsidiary on first that. So that is my conclusion. And that is my answer. Is that okay? That is my suggested answer. Any question regarding that? Yes, please.
Yeah, you have the time to write all the information that you are seeing.
What are you getting? What are you saying, Michael?
I'm talking about timing. Like, do you have the time to write everything down?
Hear him. Can you type, Michael?
Okay.
You have echo in your. Yeah, as Michael is typing, anyone with any issue?
So for me, my question was, the thing is, Greenco as an associate. So I'm still wondering why we had to talk about the control part of it of the subsidy. The control part of it, if you are considering the associate.
Yeah, you see, where have I mentioned about control? Where is it?
It's here up on control arises where we define control of things.
Yeah, do you know why? Because
No, that's what I'm inquiring.
you're comparing. They're asking you why should they account it as an associate, not a subsidiary, not so? So you have to give the examiner the difference between the two under your state part.
Oh, okay.
You get Raymond, eh?
Yeah, I get it.
Under your state part, give the distinction between the two. Then you go and apply.
Okay, thank you.
You're welcome. Patience, are we okay?
Yes, we are.
I'm waiting for Michael. Then Florence.
It's okay.
Okay. Michael is asking, do we have all the time to write everything I've put down? Michael, with practice, you find yourself writing. What I'm sure of, okay, you might not be perfect, but by the way, this is not even so much. Because once you have read this, Michael, when you start writing, you'll find that you even have more than enough to write. That's what Raymond was asking. Do we have to talk about control? Yes, the question is making a comparison between associate and subsidiary. So you must use your knowledge of the standard to talk about whatever you remember about associate and anything that makes it subsidiary. You might not use the words like this, but this is very important. I'm sure at this time, all of you should be knowing that statement, this statement here. And so it will not take you time for you to put down that an entity acquires control if it has power, then variable returns, and then it can influence earning such returns. This one is assumed knowledge and it should be part of your fingertips. When it comes to group accounts, make sure that IFRS 10 is on your fingertips, because it's the one that guides us on control. And there are very many other situations where control can come up from, as we're going to see in Roman in Exhibit 2, where you have what we call, there are those potential voting rights. So make sure that you read everything under IFRS 10, because the examiner can pick anything from there and it can put you off. So Michael, yes, the time is very limited, but as we've seen, that's why you should copy paste, because you see this copy pasting, it can help you to save time of typing. Copy paste, edit, fine tune your answer, and then move forward. I remember in my exam, I used to see such mistakes, but I was neglecting them because I knew going back to correct mistakes will take my time. So they don't mark you don't have to overdo it, but don't mark typing errors. All right, can we go to Roman number 2? Okay, someone is asking. Yes, Patience.
Ivan, I had a question, yeah? So sometimes, okay, from what I've been through it, when I'm reading this in standard, IFRS 3, okay, sometimes, okay, like, I've seen where they're talking about control, and sometimes, okay, IFRS 10, I know it's not supposed to talk about control because that's when we consolidate and all that. So, is it, to be specific, is it, okay, for IFRS, we're only talking about the business combination whereby, okay, we're talking about when should we combine a business or something like that.
In
Just want a
fact,
clarification on that.
yes, you're right. IFRS 3, it clarifies if the purchase was a business, right? If the
Yes.
investor gained control, so that now you can bring in IFRS 10 for consolidation. Is that what you meant?
Yes, okay, it talks about that then, like, it talks about now you should consolidate if it's a business.
Perfect.
And it looks about those controls. Okay, like,
Mm.
okay, those three conditions to
So
look at when you're
Yoita is
looking at
saying
control.
that here I would have said IFRS 3. Is it your point?
Not really. Okay, like, it confuses me, so I wanted clarity on that. Because IFRS 10 also talks about that control bit, but also I feel like, okay, IFRS 3 also talks about it, but I'm not sure if it talks about it because it wants to bring in the aspect of if it's a business, consolidate since, okay, like you
Yes,
have control, something like that.
you are perfect. You are right. Okay. IFRS 3, it wants us to analyze, okay, the purchase. It helps us to analyze the business. If that purchase is for the business, it pushes you now to IFRS 10, and it is IFRS 10 that gives us the definition of control. I don't know if
Oh,
it's
okay.
making sense.
Yeah, it's not making sense. Okay.
Yes,
Thank you.
IFRS 3 establishes that purchase. Now, once you know that it is purchase, so it is a business combination, then IFRS 10 takes up to give you when, yes, you have bought, yes, you have purchased a business, but do you have control or do you have significant influence? Well, that is IFRS 10.
Oh, okay, thank you.
Okay, so Roman number 2, it is also about exhibit 1. And since we've read exhibit 1, we shall not waste so much time. Use exhibit 1 only. Explain how GICO should be accounted for as an associate using the equity method in the consolidated statement of financial position of Chaco at 31st March to X6. So, let us go back to exhibit 1. Who can tell me what is the mistake that was committed on 1st April to X4, okay, going forward? Which mistake these guys take? Which mistake did these guys make? Especially this one here. I explained it. That one. Okay, to make it easier, what does equity accounting tell us? IS 28. What does it tell us as far as associate accounting is concerned? Yes? Guys, what does IS 28 tell us for associates?
It should be accounted for per equity method. It should be accounted for per equity method.
And what does equity method say? How do we handle those investments? Yes? What about you guys?
You get the first audit the percentage that the entity owns on the profit of the net assets of the investee.
Okay. So here we are saying our heading was part A, number 2. Okay. Clinical. Clinical accounted for as an associate. Okay. So we are going to state. We are going to say that as per IFRS 10, okay, as per, could I say, we can say an associate should be accounted for as per IAS 28, which requires recognition of the post acquisition share of profits by the investor. Is that true? I know I will not state it as it is in the standard, but that is the idea, that once you are having an associate investment, always consider adding up your share of the profits in the associate. Are you getting it? Your share of the profits in the associate. So you can say that Chakoko. Now I'm going to copy this. Do I have it here? Where is my exhibit 1? Chakoko. Okay. I'm going to copy that statement. Okay, then I'll put it here. Where is it? Chakoko. I do that. Chakoko has stated Chakoko continued to recognize Greenco at cost. Okay, Greenco at cost in the consolidated statement of financial position, which is an error in treatment. Now my question is, since it is an error, what do we have to do to rectify this error? Which standard is that? Which standard corrects errors?
IAS 8.
IAS 8, not so? As such? Okay. So as such, Chakoko, okay, Chakoko should. And how do we treat errors? Is it retrospectively or prospectively?
Retrospectively.
So, as such, Chakoko should retrospectively correct the error, okay, and treat Greenco as what? Greenco as an associate. Here you can say correct the error as per IAS 8 and treat Greenco as an associate. Now the question is, how do we treat associates? We said we should recognize the post-acquisition profits. And they told us that, let us look at this. They told us that, where is it? It is here. The carrying amount of the net assets of Greenco on 31st March 2026 was at 348 million. The increase in the net assets of Greenco since acquisition was solely due to profits. This means that these guys, the increment in the net assets is due to profits, and these profits have to be shared with the investor. So the increment in the net assets has been as a result of profits, so we should share those profits with the investor. I don't know if you're getting it. Meaning that now the share of profit is going to be added on the initial investment in GCO to give you the current value that must be recognized in the financial statements. So the question was how we should treat explain how Greenco should be accounted for as an associate using equity method on that date. So we have talked about an error they should rectify. Then we put here, okay, we can say since the net increment in the carrying amount of net assets of Greenco, okay, we can say since the increment in the carrying amount of the net assets of Greenco was due to, since the increment in the carrying amount of net assets of Greenco since the increment from when was it bought? Is it 1st April? Yeah, should be 1st April. So remember, when you have your exhibit side by side, you won't be scrolling the way I'm scrolling. So I'm going to copy that. You just copy from one side, put to the other side. Okay. Where is it? Since the increment, since the increment from 1st that to 31st March 2026 was due to, it is here, was, so in fact I can use even their words, was solely due to profits. Then this has to be recognized as share. This has to be recognized as, okay, we can say a share of these profits has to be recognized retrospectively in the consolidated, what was the question? In the consolidated, where are we? Okay, I want to copy this. I want to copy that and put it here. This has to be recognized retrospectively in the, put it here, in the consolidated statement of financial in the financial position of Charcoal at that. Therefore, okay, therefore at 31st March 2x6 Clinico, okay, Clinico, okay, can say an investment in Clinico as an associate should be recognized at dollar. Now we put in brackets, okay. We said the $100 million these guys bought plus the share of the post-acquisition profits. And remember the 3, where is that value? This 348 from what? From the 348 from 286. Why are we taking the share from 2x5 and 2x6? Because we are correcting the errors retrospectively. That's why I'm going to get the difference between that value, the 286, where is it? Okay, the 286, so this is 30% times bracket 348 million minus dollar. Is it 246? I'm going to go back and confirm. Okay, so is it 246? It is 286, guys. That's why putting the word processor and the exhibit side by side makes it easier. You don't have to scroll. 286. So what is the difference? What is 30%? What is 348 minus 286? Do you get 62? Then times 30%. Do you get 18.6? Guys, do you get 18? So 18.6 plus 100, you get 118.6 million, not so? All right. Therefore, at 31st March, an investment in Clinico as an associate should be recognized at this full stop. So this one can, someone I think is putting up their hand. Yes, Florence.
Even I did not see where the 100 million came from.
But do you know IS8 retrospective accounting?
Yes.
Okay, let me show you. This is 1st April. It was first what? 1st April 2x4, not so? These guys went up to, this is 31st March 2x6, not so? So since at this date here, okay, this is an associate already, not so? So let me do this. On 1st April 2x4 Clinico is an associate. So since it is an associate, IAS 28 should work. Cost of investment 100 million. Is that true? Is that okay? Then share of annual profits, this should be equal to the 30% times profits for the year. Profits for the year. Okay? This was ignored. This was ignored. So this is now, we can say, this should be 31st March 2x5. Are you getting it? This was ignored. Now we come to 31st March, okay, 2x6. You get it? Still, this is an associate, so you should have the carrying amount of the investment in associate, then you add on share of annual profits, which is 30% times profit for the year. Okay, but they told us that on this date, okay, on this date, this one here, net assets were 286 million. We are 286 million, okay? But here now, net assets are $348 million, not so? And they said this increment is due to profits and only. Are you getting it? First, are you getting it?
Yes.
So therefore, the profits and you don't write this in your answer. The profits earned in the 2 years equals what? Equals $348 million minus $286 million. And this gave us what? Is it 62? Is it 62 million? Yes. So meaning that now at this point, okay, we should have this carrying amount. Okay, let me take this to be the cost. See, these guys ignored this, not so? So carrying amount, they are recognizing it at 100 million. Then the share here is going to be 30% times the 62M. Will give you the 18 point. It is 18 point what? 18.6 million.
6.
So meaning that now carrying amount shall be equal to 118.6 million. Is that okay? So this is the retrospective treatment that we went, picked these profits that these guys ignored in error, we corrected it, we also took for the year, so now we can get the 18 millions, including the profits for the year when they were ignored. That's how the IAS 8 comes in. Florence, is it okay now?
It's okay.
All right. So has this explanation helped someone also, apart from Florence? So
Yes, it has.
that is how the IS8 came in to rectify the error that was committed in the previous year. Michael, are we at par? Okay. So you guys, yes, Michael.
It is okay, man.
What is important is please to read and understand the standards. Otherwise, because if you have the hints from the standard, yeah, then the application becomes very, very easy. Okay, let us go to part B. Part B. So once you're done with that, let us go back to our, you go to your word processor and then also put part B. It's only one. Using exhibit 2, explain briefly why the classification of charcoal coals investment in green coal should change. Okay, so we are saying, we can say green coal classification from associate to subsidiary. You underline, then you go and read your what? You go and read the exhibit. They are telling us why should they change from associate to subsidiary. Let us go and read exhibit. Exhibit 2. It is here. Maybe I can push this one down. Okay. CIRCO acquired a further 18% of Greenco equity on 1st April to X what? To X6. So, what is 18 plus 30? 48, not so? Patience, does 48 give us control?
No, it's less than 50. But you have to first look at the information to see if it gives control.
The remaining 52% of equity of Greenco is owned by a few other investors, none of which own more than 10%. Still, it is true that CIRCO owns a major minority voting rights. Okay, at least 48 is way higher compared to 30, but that does not give it control. Yes, it owns 48, the others are having 52, and it's broken down into 10%, but it doesn't give him, or it doesn't give CIRCO control. On 1st April, CIRCO also acquired some share options in Greenco, exercisable anytime until. Now these are the potential voting rights we are talking about. If you can remember, in our notes we have it. These guys have more options. The exercise price of the options at 1st April was just above. So let me ask you, I think I asked the same question when we are dealing with IFRS 2. As a rational investor, would you buy those options? Yes? As a rational investor, would you buy those options?
The answer is no, Ivan.
The answer is?
No.
The answer is no. Okay. Let us read, let us continue. I want to show you something. Here. Let me first look for it, then I come and explain that point that I was trying to construct. There is something I want to show you regarding the regarding those shares that the standard provides. There is a term they use, it's called what? It's called, let me get it, guys, give me a second. Let me look for it. There is a statement that the standard provides when it comes to those other, what is it? Give me a second, I get it for you. Okay, where is it? Should be somewhere. Where is it? Should be around here. Guys, wait, I'm looking for it. I know it should be around here. Should be here. Anyway, once I get it, I think I will share it. There's some statement we use. It's more like the potential voting rights, but there is a name the standard gives it. Yes, let me just hope I can get it and I share with you guys. Where is it? Should be around here. Where could it be? Okay, I will share with you, but let me just give you the explanation. Okay, where is it? Here. This statement here, there is a term the standard gives, but it talks about if there is any potential voting rights, you must always put them under consideration. 1, if you own, let me say 40%, but you are likely to buy more shares in the company, okay, in the shortest time possible, even if it's a year, within a year, and you're likely to buy more shares that will give you control over the investee, then those potential voting rights should be put into consideration. The standard goes ahead and says those potential voting rights should be exercisable. So why I asked you this question here, the exercise price is higher than the market price. So as a rational investor, you might think that yes, these exercise price, these options shall not be exercised because I can't buy something at a higher value when on the market are at a lower value. But now they give more information. Even if this is negative, they give more positive. Okay, more positive information. Greenco has been profitable for a number of years, and the share price has been on an upwards trend, which is expected to continue. You see, even if, yes, although on 1st April, the shares were out of money, but they are giving you hope that, you know what, these shares, the price keeps on increasing. So even if you buy now, tomorrow you can exercise, or you can sell them at a higher price. Okay, Charcoal would increase its ownership should it exercise its rights. So once they exercise the rights, they will become major shareholders. It is believed that there would be additional cost savings should the additional shares be acquired, as decisions at board level could be more efficient. So guys, since Okay, since acquiring more shares or exercising the options will give these guys control, and also they get additional benefit. Okay, they get additional cost savings, then they are likely to be influenced to exercise the shares, and therefore there is a likelihood that the potential voting rights are going to be earned by SICO, and that can force them to move from an associate to a subsidiary. Have you guys got my discussion? Yes? Hello?
I'm getting it properly.
You can't?
I'm not getting it properly.
You're not getting me properly. That's why I wanted to get, there's a statement I wanted to get for you guys from the standard itself, because once you have that, then it becomes very easy. Let me get it. Because once you have that information, then it becomes very easy. There's a statement contingent, okay? I don't know why I cannot see it. Anyways, so we all agree that this is a potential. This is a potential voting rights. Okay, but now the standard says these potential voting rights should have the capacity to be exercised. That, okay, it should be probable that the entity will earn them. Now, when the examiner was setting this question, they tried to confuse you. So since you know by standard that these potential voting rights should be worth exercisable, now the guy gave you this. So this one here, this is now my comment. Since this is out of money, no rational investor, okay, no rational investor can buy or can exercise. So this is negative, meaning that if this is the case, these guys cannot exercise their rights. So since they cannot exercise their rights, they can't go to 60%. But now they say, this one here, this is positive. GECO has been profitable for a number of years and the share price has been on an upward trend which is expected to continue. Now this changes the narrative. This changes the narrative. Investors, or can say directors, directors of Charcoal Co can buy the out of money options with hope of them gaining more value. Are you getting it? Now this is positive. And then furthermore, what are they saying? this one here, it is believed that there would be additional cost saving. So this is an additional benefit. You are going to buy an out of money option. It is likely to gain more value, and you have what we call, this one is this is cost saving, or the standard says if it is not cost saving, it can be improving the economies of scale. So this is an additional benefit even if the directors buy the out of money options. Remember, options can be in the money. They are in the money if the exercise price is lower than the market value or the market price. These ones are out of money because the exercise price is higher than the market value. So, given this fact, here we are saying it should be okay, these rights have to be okay, there should be high. I want to phrase it, there should be a high likelihood of these rights to be obtained. That's what the standard says. So if there should be high likelihood of them to be obtained, okay, let me use, okay, but now we are saying this one is making it worse, but now we have 2 extra good points. So these 2 extra good points can force the directors to exercise their what? Exercise their options. And since they can exercise their options, then this is going to come out right. So since they are to exercise, then they will go to 60%. And if they go to 60%, it qualifies to be a subsidiary. Have I tried to help you understand the scenario? Raymond?
Yes.
Raymond?
Yes.
Is it now clear?
But I'm trying to digest it.
You're trying to digest it? Just that I'm not seeing, there is a statement from the standard, but I can't really find it, that talks about this. Let me try to, I can't put it out very well, just like the way the standard gives it. But this comes to, okay, where is it? Yes, I've seen it. Let me get it for you. It is here. I've got it. It is right from the standard. Let me get it somewhere. This is after control. Here it is. Here it is. This is provided by the standard. Let me give you this. Once you read this, okay, let me put it here. Yeah. So, are we all seeing this? This is under IFRS 10 control. Okay, the standard says there are 3 elements to control arising from the definition. That is power, exposure or right to variable returns, and ability to affect those returns. We all know this, not so? Then it says
Yes.
under power over the investee, holding more than 50% of the voting rights in the investee. This is the first one. We talked about it. And any potential voting rights that the investor holds in the investee. Are you getting it? And what do they mean by potential voting rights? E.g., share options or convertible instruments. There should be share options or convertible instruments. And now in our case, we had share options. And it says, in order to contribute to control, these must be exercisable or convertible at the current time. If this is not the case, they are ignored. Raymond, are you getting that?
I'm getting it.
No, you're getting it.
Yes.
So, what the examiner did, wanted to confuse you that they cannot be exercised. He put this statement. Are you getting it? He put this statement so that he can put you off. But again, he said there is this other positive thing. In addition, there is this other positive thing, meaning that even though these shares are out of money, they are exercisable because of the other benefits. Do you get it?
Yes, I get it.
Now it also says, consider the size of the investor's voting rights relative to other vote holders and the number of other parties that would have to act to outvote the investor. This means that power may be achieved where less than a majority of votes is held. I'm sure this one is now okay with you guys, not so?
Yeah.
So, this scenario was picked from this fact. So if you had not read this scenario would have been very hard for you. Is that okay with everyone? Am I now clear?
To me, you are.
Okay, Patience, are you okay?
Yes, I'm okay.
Right. So let us proceed. Let us see how. Should I draft the answer or I leave it to you guys? Should I draft the answer or I leave it to you guys? Let me take this down. Yes? Guys, should I draft the answer or I can proceed? It is clear now.
Proceed.
So I no need of drafting the answer, not so? Okay. I will go to part B, no, to part C. Using Exhibit 2, explain briefly how the additional purchase of the 18% equity in Greenco should be accounted for in the consolidated financial statements of Charcoal. So now us to use Exhibit 2, there's some 18%. Where is it? Exhibit 2, 18%. Exhibit 2, 18%. Okay. Should it be 2 or 3? Because I'm seeing it in 3, right? Probably that was an error. Okay, so they are saying, let me check out. Let me go to the original question and see if it is 3 or 2. Okay. Okay, this guy, they just made a mistake, eh? Should be exhibit 3. Should be exhibit 3 here. Where is it? This should be exhibit 3. Okay. Using exhibit 3, explain briefly how the additional purchase of the 18% equity in Greenco should be accounted for in the consolidated financial statements. Now, is this a step-up acquisition? You see, you're moving from 60 to 78, not so? How do we call that movement? Is it control to control or no control to control? Yes?
Did you say it's from 60 or you said it's from...
Yes?
Is it from 60? Like, I'm requiring to know the exact percentages. It's moving from what to what?
Perfect. That is a good one. When it comes to, you see, when you read further about this standard, yeah? This one here, okay? When we are going to consider Charcoal to have control over Greenco, okay? But when it comes to the calculation of goodwill, we move from 38, was it 30? Hello?
Plus the whatever the exact, the new shares, it's now 48.
It is now 48.
Yeah.
Perfect. Then 48, we add on the 18. Guys, are you getting it? With the potential voting rights, we don't take the 60. We take from 48 to, what is 48 plus 18? Is it 56?
Previously it was 30. Then you added on 18, so that gives us 48.
48, right? Now
Yes.
what is going to be the NCI? Yes?
52.
52.
So to be the 52, right? So that is the movement. Let me give you something. I don't know if I have it here. Here it is. Okay, where is it? It's here. I wanted to check something. When it comes to the variable returns, okay, we consider the initial voting rights, which is 30%. So meaning that the question from Raymond was correct. That now, you see, the guys already have control, okay? But now this is going to be a piecemeal acquisition, implying that we have to calculate goodwill, because these guys are now having control over what? Okay, so we're going to say here, let me say, since Charcoal Co has control over Greenco, okay, the acquisition of the 18% equity is treated as a piecemeal acquisition. As such, goodwill has to be calculated. I don't know if you're getting it. And how do you calculate goodwill? Then you can give hello, do we know calculation of goodwill for piecemeal acquisition? We consider the initial investment in Greenco and then add it on. We add it on the what? On the other additional consideration that was paid. Let us first read the scenario to understand the concept very well. Where is the scenario? Where is the scenario? Okay. The directors of Charcoal have prepared a spreadsheet. Okay. The investment in Greenco have been set at cost and 66 million. Okay. The net assets of Greenco have been included at their carrying amounts. Are you seeing this? The net assets of Greenco have been included at their carrying amounts. But the standard says we should recognize them at fair value. The equity of Greenco has also been included as a balancing figure. Do we have to? Look at this. The equity of Greenco has also been included as a balancing figure. Do we include equity of the subsidiary when preparing consolidated statement of financial position?
No.
We don't. So that is an error. Now in your part C Roman number 2, you have to remove all those errors. You have to make the adjustments. Goodwill has not been calculated. You see, it is a subsidiary now, but they're not calculating goodwill. Only if you're getting the argument. In fact, these guys were right, by the way. They're talking about 18% in Exhibit 2. Are you seeing it? Guys, are you seeing 18%?
Yes.
Mean that the question was okay, it was Exhibit 2. Now we have to just tell them that since they have gained control, then they should account it as a subsidiary. Where is it? This is Exhibit 2. That's where, okay. Explain briefly how the additional shares should be accounted for. Additional purchase of the 18%. This one, it just becomes part of the what? Part of the consideration. Okay. Where is it? So, okay. Charcoal acquired a further 18% of Greenco's equity on 1st April 2x. On 1st April 2x6. So, meaning that since these guys, they paid more 18%, and remember, since it is a step-up acquisition, and they now gained control, these guys are going to be having 48, but they'll be the parent, and then the 52 is going to be the NCI. Implying that, while consolidating, they should find the goodwill, and this amount that this guy is paid, and that one I think is given down here. The consideration for the further 18% of the equity shares of Greenco on 1st April 2026 is included there at cash amount. So they paid this much. So meaning that when these guys are calculating the goodwill, they should have the previous equity investment in Greenco, and add it onto the cash consideration for the 18%. I don't know if you get it. So here we are going to say that. Let me put here. Where is it? Okay. Since Charcoal has control over Greenco, the acquisition of the 18% okay, you can say that the acquisition of the additional 18% equity gave Chakoko control, okay, the acquisition of this. Yes, please.
Is it really the acquisition of the 18% that gave them control? I thought it was the options that are exercisable.
Yes, I'm trying to draft the answer, right? So it's the acquisition of the additional 18% equity and the potential voting rights gave Chakoko control over Jinko. Okay, as such, okay, as such, the additional consideration paid for the 18% should be part of the what? Should be part of the fair value of the consideration when calculating goodwill. Does that now make some sense to earn the 2 marks, or we have to add something? Are you getting this argument? I'm using you see, they're asking us, how should we treat the additional 18%? This 18%, since we paid more money, it means that the money that we pay to acquire the 18% becomes part of the consideration when we are moving from equity accounting to consolidation. I don't know if you're getting this argument, but for me that is my interpretation of the what? Of the question, that we include the consideration of the 18% in the consideration of the, but remember we're supposed to add the, when it comes to step-up acquisition, we get the initial investment, we add on the consideration for the additional purchase for us to get the fair value of our consideration that we paid to get the new stake of 48% in the investee. Is that okay with everyone?
Okay.
Yeah, I know the question is kinda heavy and probably you've not been practicing, but yes, that's the interpretation. And can we just call it a night? We meet on Wednesday to finish it up. Is it okay with everyone?
It's okay.
It is fine.